Welcome to episode 10 of Citi Market Watch, a small but important milestone in our effort to bring you timely insights on the markets and investment strategies. A big thank you for your continued support to date. Today we have with us our Head of Investments and ESG Task Force lead, Leo Boon Yin. Boon Yin plays a very important role in facilitating, aligning, and integrating our sustainable agenda, which encompasses operations, employee knowledge and awareness, regulatory adherence, branding, and client solutions. Thank you so much for making the time, Boon Yin.
Thanks, Sant. Very excited to be here.
COVID-19 has polarized the world on many issues, but it has perversely or unexpectedly added focus to sustainable investing. The decline in manufacturing, social activities, air travel, and commuting saw global CO2 emissions fall 7% through 2020. We saw clear blue skies in some of the most polluted cities and across the world, clear water and dolphins in Venice, and kangaroos bounding through the main streets of Adelaide. How we work and live, from work from home to home-based learning, Deliveroo to Zoom, consumers and companies are rethinking their behaviors and business models to adapt to this changing landscape. In addition, the science and reality of increased weather disasters acutely reminds us that we needed to have transitioned yesterday to a more sustainable world. Boon Yin, how has this strange confluence or coincidence happened?
And as you have described before, the pandemic has been a structural catalyst. Initially, the pandemic necessitated strong economic relief, but this has now evolved into historic physical stimulus, as governments have been exceptionally aggressive in reflating their economies out of pandemic-induced recessions. Yet, the silver lining has been the renewed calls and support to channel these stimulus packages towards green initiatives. Nobody wishes for a pandemic, but the monetary and physical survival and reflationary efforts has been a gift. And we need to build on it if we're going to cap global warming to 1.5 degrees Celsius. And remember, we're already at 1.2 degrees Celsius. The margin for error, if there is any, is very small. This is like Luke Skywalker getting those 2 torpedoes down into the reactor core.
My favorite is, do or do not, there is no try. When we think of ESG, I think many understand the E, or the environment. We know that renewable energies are far more efficient and affordable, and people want to live cleaner and unpolluted lives.
Exactly, especially when you can see dolphins in Venice, and it's amazing. I've got hornbills outside my kitchen window.
And so the curly ones are, how do we think about S and G, the social and governance aspects?
Well, the key word is citizen or citizenship. And as we in Citi has been delivering our annual citizenship report now for 20 years, we can talk about this more later, but the key emphasis here is the distinction between consumerism and citizenship. For the longest time, we have been possessed by consumerism, and it makes us feel good to want to consume more and more of everything. But citizenship is being aware of how we live together in harmony. To be fair, we can't help being consumers, but when we incorporate that citizenship lens, there is a profound change in attitude and behavior.
I suspect most of us scratch our heads the most when thinking about the social factor. We feel it, but because it seems less quantifiable, we are told to discount it. But ESG isn't new. And as you said, Citi has been reporting now for over 20 years. And companies with better ESG metrics see a correlation with better financial outcomes. Boon Yin, you know what I'm going to say next, so I want you to say it.
Thanks, Sant, and I'm happy to. We know that companies that have higher percentage of women in management tend to have better financial performance.
Perfect and brilliant. And we very much see similar data from Glassdoor and trends confirming that diversity and inclusion across gender and race and closing the income gap are key factors in driving high-performance cultures and delivering results for company stakeholders. As an economic student, I want to reinforce the point that industrialization and globalization has driven economic growth at an unparalleled pace and scale through human history. But it has been able to do so because costs have been externalized, meaning we could pollute the world and it was always, and sadly, the broader environment or someone else that paid for it. With greater will, technology, and understanding, we can now be forensic across supply chains with an ESG lens, meaning we can quantify all these costs, carbon in particular, and internalize it. Markets do work. We just need to ensure that the price is right.
Too much flowery jargon, son. Citi analyst estimates 44 trillion US dollar in economic value is linked or dependent on nature. 80% of world's terrestrial biodiversity lives in forests, and we're losing a football field of rainforest every 6 seconds. We've lost 68% of the wildlife population since 1970. This is really tragic, but we can make a difference, or we simply just have to. And as we talk about consumerism and citizenship earlier, whilst we do need governments to make big, bold, and necessary decisions, we can make a difference too. Citi analysts also notes that 75% of deforestation is related to very avoidable things: cattle farming, soybean, palm oil, and the like. What we consume does make a difference. By the way, before the 26th UN Climate Change Conference, COP26 in November, there's also the UN Biodiversity Summit to take note of in October.
Thank you, Boon Yin. This really helps me reinforce the point that ESG isn't a niche consideration. In many aspects, ESG standards are well placed and are mainstream. For example, there are carbon trading systems established across Europe, North America, and China. Investors are demanding ESG guardrails. ESG investments have risen over 50% in the last 5 years, and there is now over 100 trillion US dollars of assets under management, represented by the signatories to the UN's principles for responsible investment. And this continues to grow. Boon Yin, what are Citi's efforts here?
Citi has made a commitment of 1 trillion US dollar to sustainable finance by 2030, in alignment with UN's agenda for sustainable development goals. At its heart is our 2025 Sustainable Progress Strategy, which is a 5-year commitment to finance and facilitating 250 billion US dollar in environmental activities, as well as a further 250 billion US dollar by 2030. In addition, a further 500 billion US dollar more in investments will be allocated in other areas such as education, affordable housing, healthcare, economic inclusion, racial diversity, and gender equality. Citi is also committed to net zero emissions by 2050.
Thank you, Boon Yin. It's great to have you join Citi Market Watch, and we hope you have time to come back.
Thanks, San. Great to be on Citi Market Watch. But if I may add one more thing, ESG is simply best practice, and it is how, as global citizens, we drive alignment and achieve sustainable goals. And it's very much about impact. You could choose organic or locally grown vegetables or industrially grown versions from Canada. And in many ways, who you bank with is also part of the decision-making process. Is your investment and banking partner making the needed impact?
Very nice, Boon Yin. The November COP26 Global Climate Summit isn't a negotiation, but a critical step forward in agreeing for action, for impact, in recognizing and solving this most complex and unprecedented problem in human history. Many of the global policy efforts discussed, we have actually touched on in previous episodes. In summary, ESG is a big topic, but we hope that in this short time, we have cut through the noise and highlighted the important actions we can all play in driving cleaner solutions for the future, to be on the right side of history and be rewarded for it. For more information and opportunities, please contact your Citigold or Citigold Private Client Relationship Manager.